Let's now talk about these tax proposals, both direct and indirect. We have two special guests in our studio. We have Ravi Agrawal, Chairperson, Central Board of Direct Taxes with us, and we also have Vivek Chaturvedi, who's Chairperson, Central Board of Indirect Taxes and Customs. Good evening to you both. If I could come to you, Mr. Agarwal, first and talk about, well, the elephant in the room has been the STT changes and the way the markets have reacted to it. Do you think the reaction has been a little bit too much? Perhaps a little time needs to be taken to digest the proposals, because they would discourage speculation, especially in derivatives. But who would it actually hit? Will it hit the big players or the normal retail traders?
So if you see the provisions that have been brought out in this budget, the cash segment, STT on cash segment has not been disturbed. So because essentially that is related to investment, so that's not disturbed. But so far as FNO segment is concerned, that is largely speculative in nature.
Derivatives, yes.
Derivatives. And the volumes involved, that is over a period of time, over past years, if you see, past 2 years, the volumes have grown exponentially. Then the retail investor, participant in this FNO segment, largely they have incurred losses. So therefore, with that perspective,
I think more than 85% have incurred losses.
Exactly. And the volume of FNO, if we see, it is more than, as the figures reflect, is about 500 times the GDP of the country. So that is the extent of the volume that is there. So the attempt is basically to address it through some sort of a tax increase in the rates, so as to effectively dissuade to some extent the retail investor from actually going in for speculation and incurring losses. So that is the primary idea behind this proposal.
Mm-hmm. And if we talk about direct taxes on income, there's no major changes there, but the new Income Tax Act comes into force from the 1st of April this year, and that itself, do you think, will usher in a lot of changes, perhaps widen the tax base as well, and positively impact the government's direct tax revenues too? What is your estimate now?
Absolutely,
for that?
And in fact, if you recall, a year back, when we were discussing in this same studio, and we were talking about the bill. At that point in time, it was income tax bill of 2025. Essentially, at that point in time, the effort was to simplify the language and to simplify the way in which you can present the provisions.
And that simplification has gone further as well with amendments?
Yeah, so the simplification, ultimately the Parliament actually approved that bill, and now it is an act of 2025, which is going to be rolled out with effect from 1st of April 26. So the present proposals in the budget is a step 2 in that direction. So for step 1 was simplification of language and the way we present it. And the step 2 is simplification of the processes, consolidation of the processes, and making some changes so as to make it easy for the taxpayer for compliance purposes, prompt better compliance. You see, the taken together simplified language as well as the changed procedures and provisions going forward would make it easy for the taxpayer on one hand, and also for the tax administration. So there are a series of changes that have been made, a bouquet of changes, I would say, which includes decriminalisation provisions that have been brought out, very comprehensive decriminalisation that has been done. Then the provisions of updating the returns.
So there's fine, but there's no prison term or
something
like that.
Earlier the defaults would involve rigorous imprisonment for as high as about 7 years. Now it has become graded. And at that point in time, I mean, in the old act, it was minimum imprisonment and then the maximum. Now what has been, minimum imprisonment has been done away with. And so if a prosecution happens, then maybe the punishment could be only fine rather than imprisonment. So that keeping in view the philosophy of Jan Vishwas, the alignment has been done. Then through updated returns at every stage of the proceedings, the taxpayer is now being given a chance to update the returns and come out clean, including after issuance of notice as well as after passing of the assessment orders. So, this is yet another change that has been done in this act, which is a major procedural change. The third major procedural change is combination of assessments and penalties. So, earlier it was a sequential sort of a process. First assessment would happen, then it would pass through the process of appeals. After the process is over, then the penalty proceedings would be, you see, initiated, and then it will again go through the same process.
A long time.
So, it would take a long time. It was a pain for the taxpayer. But now what is being proposed is that the two things, assessment as well as penalty, would go together.
Hand in hand.
So therefore, you see, it saves time, it minimizes litigation. So for the tax administration,
what sort of an impact would all this have on the bottom line in terms of increasing the tax base and increasing overall revenue through direct
ultimately,
taxes?
the philosophy should be that if you make it easy for the taxpayer to comply, the taxpayer is comfortable with the compliance process as such, and the provisions are simpler and easy to understand. Naturally, the tax base also increases because more people come into that fold. No, I mean, the projections, I would not be able to give those projections.
Okay.
But then, as a natural, you see, I would say, the result, it would actually result naturally in improving the tax base and improving compliance.
Okay. Mr. Chaturvedi, pardon me for taking a little time with Mr. Agarwal, but thoda zaruri ho jata hai. But if you come to indirect taxes, a lot of changes have been made in this budget as well. Very targeted and critical in sectors which need a helping hand or need encouragement as well to be able to be more competitive within the Indian market and even outside. Right. Tell us about that.
So, if you look at the budget proposals, particularly on the rate side, because there are two parts to it. One, of course, is the procedure part also. I will come to it subsequently. Now, if you look at the rate side proposal, which is largely customs duty exemptions, it's been a very carefully nuanced and calibrated approach, and it's very sector specific, as you rightly said. It's also looking at where the industry needs protection, where raw materials are required on a concessional rate or a duty free rate to boost production, make the industry more resilient, to look at issues like our energy security. For example, we've done away with the capital goods for manufacture of lithium ion cells for energy storage systems. We've done a duty exemption on monazite that is used to manufacture magnets.
I'm not sure if I heard the FM, but she did not mention, she normally does mention these things as to how much revenue will be foregone because of these changes.
I would say more importantly than the revenue foregone is how critical the concession would be in relation to a sector and what it in turn promotes. Now, for example, a concession has been given to the seafood processing industry. So, it was linked to the FOB value of exports. So, 1% of your export you were allowed duty free imports, which has been now jacked up to 3% of the total thing. This is a pure export boost initiative. So, the efficacy of the revenue measures would also need to be looked in the context of how critical that sector is. For example, we have done away with or provided a concessional duty for setting up nuclear power projects. Now, you do not look at it from the revenue foregone perspective on that, you look at it more from the country's energy security perspective. Or for example, if I have done away with a duty on shoe uppers, it is largely for the export effort. So, it has been a very calibrated, very nuanced approach, sector by sector, promoting MSMEs, promoting growth, looking at protection, the basket, if I would say so. And this is as far as the rates are concerned. The second part, of course, is the process reforms that we brought in, which again is a very big measure, because most of the process reforms are designed to facilitate the element of trust between the government and the industry. So, we have, for example, brought up an extension of the duty deferral for AEOs, so that you can pay duty only once for all your imports, once a month. We are rolling out the same scheme for a class other than AEOs, which are similar, like manufacturer importers. That is a proposal. If you look at the changes we made in the courier export regulations, where we have done away with the limit of 10 lakhs for promotion. This is going to help our MSME sector, our niche people who had a problem that the value limit was much more than 10 lakhs, they could not use the courier part. The industry problems of what to do with returns and rejects in the courier mode. We have now made it very simple, so that they do not have to get the packages open and pay a duty. It can be re-exported based the establishment of the identity between the goods exported and the goods re-imported. So, a slew of measures designed to look at specific sector wise pain points have also been undertaken. I am sure overall conspectus of the reforms is more both on the rate part as well as also on the process part.
The other point is that India, especially in this phase when Donald Trump came to power and came up with his tariffs, slew of tariffs for different countries. The US market is closing up. We need to make our own industry more diversified in terms of exports, and to give everyone really who is into exports a helping hand. And at the same time, make them more globally competitive as well, because at the same time India has been doing other FTAs which will lead to later on foreign goods coming in more easily to our market as well. So how has this issue been addressed through the issue in indirect taxes?
Well, as far as this particular issue is concerned, as far as the FTAs are concerned, we have been extremely mindful of the fact that the domestic industry has on sectors we need to give it more padding and more protection. I think that has been taken care of during the negotiations. CBIC of course is a part of the negotiations. More importantly, the measures that we have undertaken, particularly on the concessions that have been given to the industry, are largely designed to increase the export competitiveness of the industry in these difficult times. For example,
the aviation industry, if they need
the
parts
aviation industry, the fisheries, in fact, that's a very important sector. For example, we've extended the definition of India in the territorial waters in the Customs Act. So Indian fishermen can harvest the fish even on high seas in the exclusive economic zone, and from there they can export it. And if they bring it back to India, to the mainland, it's not treated as an import. So competitiveness for the industry, specific sectors, a specific example, leather industry for example, we've done away with the duty on shoe uppers, because that's one of the major components of leather exports. So we have taken those very calibrated measures to give the concession so that the sector benefits and becomes more competitive.
And this custom duty halving on any imported item of personal use.
Yes.
What is that about, and how will it be determined what is personal and what is not?
No, there's a definition of personal imports in the Customs Act. We have rationalized the duty to 10% for all the personal imports, and this is largely to promote the ease of living for individuals. As are certain other measures.
This will apply to everything, anything for personal use, could be jewelry, could be electronics.
Yes, so we have made the changes in our baggage rules also. In fact, that's another big ticket item that we have introduced, if you look at that. Now, the baggage rules, for example, were not revised since 2016. So it's been a 10-year period. We have revised it. We've increased the general fee allowance from 50,000 to 75,000 for tourists. For foreign tourists, it's gone from 15 to 25,000. Earlier, the jewelry was excluded from the definition of personal effects.
Okay.
We brought a definition of personal effects which is more inclusive. We've done away with the value limits on the jewelry that could come or be brought into the country by a lady passenger or a gent passenger. For example, if you are aware, there was a value cap along with a weight cap. So we've done away with the value cap. Now it's a flat weight cap of 20 grams and 40 grams which can be brought in. We've eased the transfer of residence rules. We've eased rules relating to temporary import of professional equipments which I don't have to clear into India on payment of duty or suffer a detention, a simple certificate, and when I'm taking it back, that certificate suffices for that purpose. So all these measures are largely designed for ease of doing business, for ease of living, and also for doing away with a lot of I would say
inconvenience, I guess.
Inconvenience that was caused at the airports.
And Mr. Agarwal, if you could tell us about how these direct tax proposals will lead to reduction in litigation. You mentioned how the punitive element has been reduced from no prison to or limited time to mostly fines. But what about the other provisions, other issues where litigation does arise under the present circumstances?
Yeah, so in the change provisions, what we have proposed is that once a notice is issued for assessment, even at that stage, post issuance of the notice, where prima facie issue has been crystallized, the taxpayer has been actually notified about the discrepancies in his case. Thereafter, if the person wants to come forward and disclose with some additional tax, the person can actually go forward and do it. Till now, that provision, that facility was not there. So with that window, maybe people would come forward and they would disclose and close the litigation. That is one. The second is, even after the person has gone through the assessment process and an order has been passed, after that, if the person wants to actually settle the case, in the sense that doesn't want to further pursue it, and so there, at that point in time also a window is there. The person can pay some additional tax and then close the case. So that way the multiple opportunities are given to the taxpayer to actually ensure that, he doesn't take forward the litigation. So that is one. And the second is, as I mentioned, clubbing the assessment with penalty. That also would help in minimizing the litigation. The third is that with the simplified language, since there would be more clarity, therefore the compliance would also increase. So that would also help in reducing the litigation.
So this is for individuals, and what about corporates?
This is for all.
All. Yeah. Okay. Wonderful. And in terms of the kind of things that have been done with TCS, what has been in the mind of the government in proposing such a change, again slashing tax rates to a huge extent, and even giving tax holidays to the companies who can come in the cloud business or set up data centers?
Yeah. So these are two separate components. Insofar as TCS on remittances, when we talk about that, for example, remittances for the purposes of education or
package tours.
Education or medicine, that is one for medical purposes. So that has been reduced, and for others also that threshold also has been taken care of. So essentially the idea is that TCS in such cases is more for tracking purposes, tracking the transactions.
Okay.
And once you reduce the rate of the TDS, it's more liquidity in the hands of the person concerned. So if there is an education element involved or a medical element involved, then it is required that the person has more liquidity with him because of the purpose for which the remittance is being made. And simultaneously with the TCS, you can track the remittance and also ensure that the compliance is there. For overseas travel, there was a request from the Indian travel agents also, but that because of the online facilities, there was some sort of a arbitrage, in the sense that since the TCS was being levied on the Indian overseas tour operators, and it was not for the outside ones, so therefore that was a arbitrage. So that has also been minimized. And so far as the cloud service providers are concerned, or data centers, cloud service providers, toll manufacturers, contract manufacturers, there the emphasis was that we need to promote this industry, because how do you actually encourage data centers coming up in the country? And this is one way in which we have brought tax certainty, and tax certainty for till to 2047. So there's a huge period for which this tax certainty has been provided, because the concern was that if they provide the services, then the permanent establishment, the concept of permanent establishment would trigger in, and the global income of those entities may also be subject to tax. So that clarity has been provided, that the global income would not be subject to tax, and it's only the service providers, the Indian data centers in India, who are Indian residents, or basically who either provide service to the non-resident or to the related parties, they would be taxed only for the India income, and so far as the cloud services income is concerned, that would not be taxed.
Okay.
So that is one. The second is toll manufacturers, so where the person provides capital equipment for the purposes of manufacturing. There also some sort of a safe harbor is provided, and tax certainty is there. Third component is about warehousing. So just in time provision of equipments or components for the purposes of manufacturing certain electronic devices. So there also it was being done on offshore. The title was being passed, and people were finding it difficult to actually navigate and to optimize the efficiencies. So to bring in more efficiency, this provision has been brought. So with these three provisions, we feel that it will give a substantial boost to the industry. Apart from that, substantial relaxation has also been given in the context of ITES services, wherein safe harbor provisions have been expanded. So from a turnover of 300 crores to 2,000 crores. So the huge expansion has been done and certainty has been provided. And we feel that with this, the industry in this vertical would actually get a good boost.
Mr. Chaturvedi, you mentioned how the sector, the nuclear energy sector, is getting a lot of break in terms of indirect taxes to promote diversification of India's energy sources and make it more sustainable as well. But the component of sustainable future for us is also a huge component is the auto industry. There was a provision related to batteries in the tax in the proposal, the budget proposals. But is there more there as far as India's sustainability goals are concerned in terms of not just the auto industry but other allied areas as well?
Most of the proposals, of course, are now on the table. So, and we did have a lot of consideration to all the proposals that did come during the pre-budget and the budget process. Auto industry specifically, of course, we haven't really tinkered with anything right now, but there are other sectors as well which have been the focus of this budget. The marine sector, the textile, the leather, nuclear energy, of course, I mentioned. And
because in previous budgets there have been concessions for solar parks and setting up.
Yeah, so for example, we have something for the solar power. Sodium antimonide has been given a customs duty exemption. That is a component that is one in terms of value, it's about 26% of the solar glass component which goes into the manufacture of solar panels for energy. So, as I said earlier, it's a very balanced, very calibrated approach. It's not a whole hog, but it's sufficiently adequate to look at the current needs of the industry, both in terms of protection as well as resilience.
Wonderful, wonderful. Thank you so much for joining us, Mr. Agarwal, as well, Mr. Chaturvedi, to talk about the whole gamut of taxes that each taxpayer, not only taxpayer, the entire country is concerned about, because it does cater to a lot of not just interest but also core issues as far as managing not just households or businesses is concerned, but even the government's revenues.